Hello and good morning, and thanks for starting your day with us. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. You're watching ET Now. Now, this is a show where we'll take you through everything that happened over the course of the weekend globally as well as in the Indian market and otherwise as well. And we'll bring you all the big cues that happened globally. And this morning while you were asleep, we'll take you through what the US markets did. We'll take you through what's happening with oil. And in the second half of the show, we'll also go stock specific and take a look at the potential stocks that could be big buzzers in trade today, and also what brokerages are flagging out for us early this morning. So with that, let's kickstart the show with the US handover. And Shreyansi, well, tell us what's happening with the US. Nasdaq has been really hot and fuming lately, but some correction has been seen over there. So tell us what's happening.
Absolutely. So it's very interesting how we're seeing things play out with the US markets. Now, when you look at US equity futures, they were little changed. And this is as investors look forward to the latest reading of the Federal Reserve's preferred inflation reading, as well as a slew of big earnings reports as well. But stocks are heading into the final week of February on a high note, and this is after the major indexes achieved new milestones on Friday and registered winning weeks with help from Nvidia's blockbuster earnings. So when you look at the blue chip Dow, that closed at an all-time high of 39,131. And the broad market S&P at one point in the session also broke above 5,100 for the first time. When you look at the tech-heavy Nasdaq as well, that touched a 52-week high in Friday's session. Investors now watching whether the AI momentum can last as economic and inflation risks linger. With that in mind, they're also looking ahead to the monthly personal consumption expenditures price index, and that is of course the Fed's favored inflation gauge due out Thursday. So that's largely what we're seeing play out with the US markets as well. When I'm looking at Europe, there's a very interesting movement there as well, because European stocks closed higher, and this is a stock 600 notched fresh record high. When you look at what's powering this move, you did see Standard Chartered that was up 6%. And earnings from Standard Chartered showed an 18% increase in pre-tax profits. So that's largely the picture coming in when you look at European markets as well.
Absolutely. With that, let's take a look at what's happening in the world of oil. And oil prices, well, fell nearly 3% lower on Friday and posted a weekly decline after a US central bank policymaker indicated that the interest rate cuts could be delayed by at least 2 more months. So that was not taken well by both these indices, Brent and WTI as well. Both indices down 0.5% as we speak. WTI just over 76 and Brent just above $81 per barrel. Now for the week, Brent declined about 2% and WTI fell more than 3%. However, indications of healthy fuel demand and supply concerns could revive prices in the coming days. Now, Fed Reserve policymakers should delay the US interest rate cuts by at least another couple of months. And that was the word coming in from Fed Governor Christopher Waller, and this is what he said on Thursday, which could slow economic growth and curb oil demand. Some analysts, however, say demand has remained largely healthy despite the impact of the high interest rates, including in the United States. Now, JP Morgan's demand indicators are showing oil demand rising by 1.7 million barrels per day month over month through February 21st, its analysts said in a note. And meanwhile, on the other side, when you look at all the geopolitical action that's been shaping up recently, the Gaza truce talks were underway in Paris in what happens to be the most serious push in weeks to halt the conflict in Palestine and see Israeli and foreign hostages released. This obviously happened over the weekend, and ceasefire talks could prompt the market to anticipate an easing of geopolitical tensions. However, what's key to note is still there are tensions brewing in the Red Sea, and that continues. So the US energy firms this week added the most oil rigs since November and the most in a month since October 2022. That's the word coming in from energy services firm Baker Hughes in their recent oil rig count report, and it's an early indicator of the future output because that rose by 6 to 503 this week and increased by 4 when we look at it on a month-on-month basis. So, well, some demand constraints when it comes to high interest rates. On the other hand, supply is holding steady. But in the background of all of this, you also have a lot of geopolitical factors playing. So, Shreyansi, lots of factors when it comes to the world of oil, and let's see how these two indices manage to hold up over the course of the week.
Absolutely, and there's a lot of factors, or there's a lot of events that we should be looking out for. So on Feb 29th, you do have the GDP and Nifty expiry data, And it'll also be key to watch monthly auto sales on March 1st and S&P Global Manufacturing PMI data as well. Now, there's a lot of global cues, so let me break it down region by region. When we look at US, you have on Feb 26th, new home sales and consumer confidence data coming in. Feb 27th, you do have Q4 GDP and crude oil inventories data coming in. And on Feb 29th, there's initial jobless claims. Now, when you look at China as well, on Feb 28th, you have unemployment data, and on March 1st, there is official PMI and manufacturing PMI data as well. And in terms of corporate action, there's a host of counters that you should keep an eye on. On Feb 27th, there's ICICI Bank's board meet, and Vodafone Idea also has a board meet to mull fundraise. So those are the couple of counters that will remain in focus, along with NMDC. And that because it's the last day to buy to be eligible for dividend for NMDC. So keep an eye on that particular counter as well. And there's also PFC board meet to mull fundraise and Bajaj Auto's buyback record date. So keep an eye on those two counters. Now, in terms of primary market action, there's a host of counters that will remain in focus. On Feb 26th, there's GPT Healthcare IPO that closes. There is Munger Proteins IPO that opens, and on Feb 27th, there is Platinum Industries IPO that opens and Hexacom Telesystems IPO that opens. On Feb 28th, the IPO that opened on Feb 26th, Munger Proteins closes, and Bharat Highways InvIT IPO also opens on Feb 28th. Now, the lock-in period ends for a couple of counters on Feb 26th, so the likes of Gandhar Oil, Tata Tech will remain in the spotlight, and so will Fedbank Financial and Flair Writing on Feb 27th and Nova Agritech on Feb 29th. So there's a host of counters that we need to keep our eye on.
Absolutely, Shahzi. Busy week for us, and today is just Monday, so let's see how we gear up for the rest of the week and how the markets pan out. Lots of events to watch out for, but let's shift focus to some global stories that we've been tracking for you bright and early this morning. An important commentary coming in from the central bankers over the weekend. Now, we did tell you what Christopher Waller said. Let's bring you one more voice from the Fed as well as ECB. Now, New York Fed Reserve President John Williams says that the central bank is on track to start cutting rates later this year, despite stronger than expected inflation. He also noted that the progress towards their 2% inflation goal can be a little bit bumpy, but that overall the economy is headed in the right direction. Meanwhile, let's shift focus and see what's happening with the European Central Bank, because ECB's governing council member Dismal cautioned against lowering borrowing costs too early, with the rise in salaries still too strong to be compatible with that 2% price goal.
And keeping it with central banks, then, three major brokerages expect the Fed to lower interest rates in June. That's 3 months later than what the market has been anticipating. Remember, the January Fed minutes signaled broad uncertainty among the policymakers about how long borrowing costs should remain at their current range of 5.25 to 5.50% to bring inflation to the central bank's 2% target.
Well, and focusing on some big earnings over the weekend, Warren Buffett's Berkshire Hathaway reported a big rise in operating earnings in Q4, largely led by massive gains in their insurance business. Now, while cash pile expanded to record levels as well, a 17% year-on-year jump in operating earnings for the full year is what was recorded. Now, GECO, which is considered Buffett's favorite child, logged profitable year-on-year profit, where improvement in earnings was driven by the premium rate and increases and lower claims as well. Now, in his letter to the shareholders, Warren Buffett has seen remembering Charlie Munger, calling him the real architect of the present Berkshire. The letter also highlighted that markets are exhibiting a casino-like behavior, while also highlighting the investment rationale and sentiment going on at Berkshire. The letter reads, and I quote, "Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable."
And shares of Warner Brothers Discovery took a sharp hit, tanking 10% on the back of disappointing results in the fourth quarter. The disappointment largely on account of dismal advertising and company's failure to provide free cash flow forecast for 2024. Company reported a 14% decline in linear television advertising revenue and a 4% drop in actual distribution revenue. However, streaming service Max ended 2023 profitable for the first time.
And well, while we are talking about global stories, how can we not talk about Nvidia? Because new milestones for Nvidia are underway. After that blockbuster set of earnings, the company's market cap briefly surpassed the $2 trillion mark, but the chipmaker's stock pared some of the gains later in the day, leading its value to edge just below that $2 trillion threshold by the market's close. Now remember, Nvidia added a staggering $277 billion to its market cap on Thursday, the biggest single-day jump of any company so far on record.
And moving on then, Finance Minister Nirmala Sitharaman recently inaugurated BITS Pilani's design school. BITS Design School intends to create a future-focused design school that combines technology, business and entrepreneurship in design education. Let's go across and listen in to what Nirmala Sitharaman had to say at the event.
I was very impressed to know that 6,400 alumni have been founders or co-founders of several startups, and 13 unicorns have emerged from them and 2 decacorns. It's just not a believable record otherwise, but that is the speed with which you find many of the entrepreneurs trained here coming out and successfully standing out in the new era where businesses and entrepreneurships are receiving all the support from favorable policy and also favorable economy.
Well, on her way to the campus, Finance Minister also interacted with commuters during her journey from Ghatkopar to Kalyan in a local train in Mumbai. On your screen is a snippet of the same.
And top honours rolled out for Team ET Now and ET Now Swadesh at the Association of National Exchanges Members of India. ET Now and ET Now Swadesh are being felicitated with an award for excellence in stock markets coverage. And me applauded both the channels' dedication towards accurate and timely market analysis to its viewers. Certainly a momentous achievement for Team ET Now and ET Now Swadesh. Also, I would like to take a moment to thank all the viewers for being a part of this journey and helping us reach here.
Well, a proud moment for us at both the channels here as well. So thanks so much for being a part of this journey. But with that, we'll slip into a very short break, and when we return, we'll take stock of how the Asian markets have opened up this morning. So you stay tuned. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. You're watching ET Now. Let's take a look at how the Asian markets have opened up, and largely all looks good across my screen, a whole host of green that I'm being able to see. And let's talk about the index that has hit record high once again, and well, leading the gains across the Asian markets, and that happens to be Japan's Nikkei, because that index hit a fresh record high this morning as traders returned from a long weekend. Remember, Japanese markets were shut on Friday on account of Emperor's Day holiday, but now they've opened and with a bang. Let's take a look at what Nikkei is doing. Nikkei up 0.6% on your screen, right? The 234 uptick coming in for Nikkei. So well, holding on strongly to those gains. And elsewhere, China shares look to extend their winning streak as well. And let's take a look at what Hang Seng is doing. Hang Seng rather flat, not doing much, just a 5-point uptick coming in for Hang Seng as well. And let's also look at what Shanghai is doing. And Shanghai has nominally slipped into the red, but nothing much to worry about because, well, it is just nominally in the red as we speak, and we could expect it to flip again in the green, which is what we saw like just a few minutes ago. Moving on then, let's also talk about what South Korea's Kospi is doing, because that is bucking the trend, the broader trend across the Asian markets. They fell 0.5% on open. Kospi right there, it's actually losing out and down 0.8% as well, close to a 1% cut coming in for Kospi this morning. Lastly, let's take a look at what's happening in Australia. The ASX 200 rose 0.2% at open. Still over there, but not doing much, barely holding on to the green, but let's see how it pans out over the course of the day. Now, when we shift focus back to our markets and take a look at what Nifty Spot did on Friday, we did manage to close slightly in the red, but nominally not too bad at 22,122. GIFT Nifty at 22,225. Not indicating a very strong start for us this morning, but doesn't look like there's much to worry about, Shreyansi, for us today.
Absolutely, and we also have a jam-packed lineup for you on the market. At 9:20, we'd be in conversation with Sunil Kaul, Asia Pacific portfolio strategist at Goldman Sachs, to discuss his India call, and at 9:35 we'd be in conversation with Ajay Kanwal, MD and CEO, Jana Small Finance Bank, to discuss their growth figures. And at 9:50, Nikhil Sahani, Managing Director, Triveni Turbine, will be talking to us about their order pipeline, how it's shaping up. And at 10 a.m., we'd also be in conversation with Girish Agarwal, Promoter Director, Dainik Bhaskar Newspaper Group, to decode the elections outlook and how it's looking like at this point.
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Now, SEBI has released a consultation paper for mutual funds to ease the business initiatives, and it also contains several proposals regarding the relaxation of fund manager and domestic and overseas and commodity funds. Anurag Shah, my colleague, is joining us with more details on the same. Anurag, hi, good morning. Take it away.
Capital market regulator SEBI has come up with a consultation paper on ease of doing business initiatives of mutual fund. So working group has been formed, and a consultation paper has suggested major three changes as per SEBI's consultation paper. First is to remove the restrictions of investment of 25%, especially this will be beneficial for ETFs and index fund. So now 25% limit won't be there for investment if ETFs and index funds are investing in shares related to the group company of a sponsor. So that this will the limit will be up to the benchmark indices that allows, particularly in ETFs and index funds. So it will be more than 25%. Other thing which SEBI has proposed in the consultation paper is related to the nomination. So there is a deadline for nomination in mutual fund folios, which SEBI has extended now. Now new deadline is 30th of June 2024. But for joint folio holders, SEBI has proposed to make this nomination optional. The third proposal in consultation paper is related to the dedicated separate fund managers for investment, overseas investment and commodity investment. So SEBI has proposed to have an optional to have a dedicated fund manager, because it was becoming a costlier affair for companies to have a dedicated fund manager, although these funds have a research analyst investing as per their research. So in the new proposal, SEBI has proposed to have optional, to relax the rules to have a dedicated fund manager for overseas and commodity funds investment.
All right, thanks Anurag for those details. Moving on then, Z is in firefighting mode. The company has established an advisory committee to help protect the interests of stakeholders. The media giant has constituted a 3-member panel led by Satish Chandra, a former judge of the Allahabad High Court, and Uttam Prakash, as well as PVR Murthy, who currently serve as independent directors at Z. The company said it has formed the panel to review and take cognizance of the widespread circulation of misinformation, market rumors and speculation that has led to erosion of investor wealth when you look at Z.
Well, all right, let's shift focus from Z and talk about another company, though unlisted, that was making the news over the course of the weekend, and that's Byju's. Now, remember, over the course of the weekend, the founder, Baiju Ravindran, wrote a letter to all the shareholders saying that any resolutions passed in that meeting are all null and void based on the Karnataka High Court stay. Now, investors including Process, Sofina, Peak 15 and General Atlantic have moved the NCLT. That's the latest that we're covering for you when it comes to this entire Byju saga. And my colleague Anurag Joshi is joining in with some key updates from this EGM that was held. Anurag, take it away.
A shareholder convened meeting of Byju's was held today, and one of the key demands of the key shareholders, which include large funds like Peak 15, General Atlantic and Chan Zuckerberg initiative, had been the removal of Baiju Ravindran as the CEO and Divya Gokulnath and Riju Ravindran as the director of the company. And one of the key other demand is the reconstitution of the board. And also there were 7 resolutions that were tabled in the meeting today, which also included demanding a forensic audit into the affairs of Byju's, and also look into the past acquisitions and all the costs that Byju's had incurred. Now, according to a statement from one of the key investors, Process, holders of over 60% of the cap table of today's meeting had voted in favor of the resolution for the removal of Baiju Ravindran and Divya Gokulnath and Riju Ravindran. While the meeting has concluded, the Baijus had obtained an order from the Karnataka High Court in the run-up to this meeting, which had said that decisions taken at the meeting today will not have effect until the next hearing on the matter, which is on March 13th. In the past, the shareholders have claimed and they've charged the Baiju's management of financial mismanagement, which has led to erosion in the shareholder value, and this is the key rationale they've given for holding this meeting. Baiju's on its part has said that this meeting, the resolutions or any decisions taken in the meeting are not valid because one of the founders need to be present at the meeting, and the Baiju's promoters and the founders, they were not present in today's meeting.
Anurag, that's about Baiju's, but while you're with us, let's shift focus to another update then that is very important. RBI has advised NPCI to examine the request of Paytm's parent company, 197 Communication, to become a third-party application provider for UPI channel. So what more can you tell us about this development as well?
The Reserve Bank of India has unveiled further set of steps on Paytm Payments Bank following a recent order from the Reserve Bank of India which put restrictions on the bank. Paytm Payments Bank can't accept credits in customer accounts and wallets after March 15. The Reserve Bank of India took the step first in end of January when it found key gaps in the regulatory compliance by Paytm Payments Bank. The Reserve Bank of India had initially restricted the further credits in Paytm Payments Bank after Feb 29, but this month it relaxed the rule and allowed the transactions until March 15. So after March 15, there won't be any further credits in customer accounts and wallets of Paytm Payments Bank. Now the NPCI, which operates the Unified Payments Interface, has been told by RBI to examine a request by the 197 Communication, which is the operating company of Paytm, to become a third-party application provider for UPI. Now, Paytm handles are to be moved from Paytm Payments Bank to other banks to avoid any disruption, and NPCI will facilitate certification of 4 to 5 banks as payment service providers. For merchants using the Paytm QR codes, 197 may open settlement accounts with one or more payment service provider banks.
All right, thanks Anurag for taking us through that. Let's see how that pans out for the stock today. And let's focus and talk about Uber CEO who's on a trip to India, because Uber CEO Dara Khosrowshahi met with the Indian business tycoon Gautam Adani and shared the excitement to collaborate with the Adani conglomerate in the future. Talking to X, formerly Twitter, both business leaders appreciated their conversation on the Indian growth story and their vision for the subcontinent as well. Now, Adani also lauded Uber's India vision to uplift the dignity of the drivers in India, and in a post on X, Adani said, and I quote, "Absolutely captivating chat with Uber CEO. His vision for Uber's expansion in India is truly inspiring, especially his commitment to uplifting Indian drivers and their dignity. Excited for future collaborations with Dara and his team, #Uber India." He added that this discussion is timely considering India's rapid growth in the green and renewable energy sector. Also remember, Adani Group has committed some $100 billion over the next decade for green energy transition.
Well, that was quite the interesting conversation between the two business leaders. But moving on then, the government is thinking of extending the sunset clause for a 15% concessional tax rate to 3 key industries by a year until March 2025. The government is seeking feedback from the industry on the extension of this time limit for consumer electronics, EVs and semiconductors as well. Bhavya Dua brings us more details. Bhavya? Right, so what we have been hearing from the sources is that government is mulling an extension for the 15% concessional tax rate for a few key industries. And those key industries are EVs, semiconductors, as well as personal electronics, for example, mobile phones, laptops, PCs, to name a few. Now, there was a 15% concessional tax rate in existence for new manufacturing companies, which was set up post October 2019, and that exists till 31st of March 2024. Now, there was a demand by the industry for the government to extend this in the interim budget till 31st of March 2025, but that did not happen. The government only extended the sunset clause for startups and sovereign funds. So now what the industry is seeking is that there should be an extension for a few key industries, to start with EVs, semiconductors and personal electronics, that the 15% concessional tax rate under section 115 BAB of the Income Tax Act should be provided to these three key industries and should be extended till 31st of March 2025. What these industries are seeking and are in talks is that the same should be extended till 31st of March 2025, and the government should come up to a decision about the same post the general elections in the full year budget that we'll see post the general elections this year.
All right, Bhavya, thanks for bringing us that, and we'll keep you updated with more that happens on that front. But with that, we'll slip into a very short break, viewers. But when we come back, we'll bring you some stock-specific news and updates, so you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at a couple of brokerage notes that we've gotten. HSBC has released a note on credit card spending in January, where it says that it expects more headwinds. And Morgan Stanley has also come out with a note on SBI card. Gaurav is standing by with the key takeaways of both of these brokerage notes.
Yeah, so when we talk about credit card spending specifically, HSBC Bank has actually highlighted some of the key points from the credit card spending, and they believe that there are some headwinds coming up for credit card spending in the days coming ahead, because the daily spending data shows that 15% decline is there if we compare it with the after the RBI imposed some of the regulatory restrictions on the credit card spending. But if we look at the new card issuance, that has remained healthy in the month of January, and in fact credit card spending has increased almost by 30% on a YOY basis in the month of January as per HSBC. Lastly, if we look at some of the key players in this market, so there are few names coming up, as if ICICI Card, SBI Cards, Axis Bank, which has gained market share significantly during the month of January, while HDFC Bank and IndusInd Bank were some of the players who has lost the market share in the month of January. So on the back of this, we will definitely keep an eye on all these companies, and let's see how the credit card data pans out in the coming months.
All right, Gaurav, and while you're with here, let's shift focus to the word coming in from brokerages as well. Now, JP Morgan has put GAIL on a positive catalyst watch. Morgan Stanley has chosen PNB Housing as a tactical idea. So what else are brokerages betting on this morning?
Yeah, so when we talk about brokerages, first let's talk about GAIL, as you said, because JP Morgan has maintained neutral rating but has raised the target price to 175 rupees. So believe that they believe that the trading segment of GAIL is likely to report a strong set of numbers in the coming quarter. But if you look at the consensus earnings and the consensus expectation, they're expecting 14% decline in the quarter-on-quarter basis in the month of March for GAIL. So that is why any kind of positive surprise coming up from the companies in terms of earnings will be a key catalyst for GAIL's target price in the near term. Let's also talk about the widening gas trading spreads, which are noticed by JP Morgan in GAIL, which will also support the share price, and that is why they are maintaining neutral rating but has increased the target price to 175 rupees. Next, let's talk about a tactical idea given by Morgan Stanley on the PNB Housing. So they believe that share price may outperform the relative index in the next 60 days, because if you look at the valuations for PNB Housing, it is now trading at 1.1 times the price to book value, and that is why it looks a little attractive on the valuation side. Lastly, the NIMs are also going to get some kind of support because of the credit rating upgrade that we have seen recently in the company. And if you look at the short-term valuation, because it is very compelling, they believe that the share price can outperform the relative index, and that is why they have maintained outperform rating and a target price of 970 rupees in the long term. Lastly, let's also look at KIMS Hospitals, because JM Financials has come up with the initiation note with the buy rating and a target price of 2,950 rupees. They believe that actually this company is actually ideal opportunity to invest in the multi-speciality hospital segment. The company is working in a capex light environment, and that is why there are some catalysts for growth going ahead. If we talk about the cost efficiency, they are operating hospitals at a maximum cost efficiency, which is again positive for the company. They have a balanced mix of core versus new market expansion, and that is why that is again a positive for the company. And lastly, if you look at valuation, they are trading at 19 times the EV EBITDA, which shows that they have some kind of room for growth in terms of share price, and that is why this buy rating is coming up with a target price of 2,950 rupees per share.
Right, thanks, Gaurav. Those stocks will be in the spotlight on account of brokerage notes. But let's move on then. Ansh is standing by to tell us how the futures and options roundup is shaping up. Ansh?
Right, so starting with Nifty first, let's have some flashback. In the previous week, Nifty touched fresh record high throughout the week, so this is a very positive sign. Also, if you see the charts, Nifty seems to have come out of that consolidation of around 20 to 120. This is also a positive sign. But if we check the Reliance chart, which was the major contributor of Nifty in the previous session, it seems to be trading around that upward sloping resistance trend line. So this may have some hurdle on Nifty's up move. Also, if we see on option front index, in Nifty, we are seeing strong call writing happening at 22,300 strike, indicating traders expecting Nifty to take resistance around this level for today's session. This was also almost the near high of the previous session. Let's discuss Nifty Bank as well. So if you see the Nifty Bank chart, index seems to be taking good support at 50 DMA. However, it couldn't give a good bounce back from that level, and it closed almost at that 50 DMA, which keeps a cautious signal on the index. Also, if we check the index futures, then here we are seeing open interest declining by almost 3.8%, which indicates long unwinding, which is also a cautious and a bit of bearish signal here. Whereas on option front, we are seeing strong call writing happening at 47,000 strike price, indicating good resistance around this level. We saw 50 DM at 46,800 and call writing at 47,000. So this 200 point could act as a resistance and a good selling pressure for today's trading session.
All right, Ansh, thanks so much for taking us through that. Now let's just focus and talk about a stock that could be in focus today, and a one-time loss of 365 crore rupees may be on the cards for United Spirits, as the company has said that it will adjust the claim received by an institutional customer. Ashesha is standing by with more details on this. Good morning, Ashesha. Take it away.
Well, yes, just to give you some background, it was on the 11th of December when United Spirits received a claim to the tune of 365 crores from CST, or Canteen Stores Department, which is a national institutional customer for the client. The company, of course, back then and continues to say that these claims have already been settled. Later in the first week of January, company filed a writ petition with High Court, which was later rejected by the High Court. Now the company says that they filed an arbitration petition to seek interim relief with respect to this 365 crore claim. Apart from this, the company has also informed the exchanges that CST has unilaterally started settling the debit note of to the tune of 365 crores, and that it will fully be settled within the next few months, and this has come in as a negative. In fact, company continues to maintain its stance. It says that the possibility of this claim translating into a liability is quite remote, and they also say that the receivable is good and recoverable despite unilateral adjustment that is being done by Canteen Stores Department. Analysts, meanwhile, are bearish. They say that company has reported such negative provisions now and then, and this client constitutes about 3 to 4% of company's volumes, and hence volumes are likely to be impacted in the near term. So yes, a negative development that has come in for the company, probably a one-time loss of about 365 crores could be reported in company's books. The stock in focus on the back of this news flow.
All right, thanks Ashesha for those details. But with that, we're out of time on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for watching. You don't go anywhere, because the market takes all of the action forward.